Hi, Ron Benning here. In this video, I'll be giving a Sacramento Duplex market update for the time period ending September of 2024. In this video, I'll look at the key market trends like the average list price, the average sale price, the average days on the market, and the inventory level trends. I will also touch briefly on the interest rate trends, and for the first time on this report, I will be telling you what is the target GRM that will break you even. Before we dig into this month's numbers, I want to point out that all investors should be voting no on Proposition 33 this November. If this proposition passes, several important rent control aspects will be increased very negatively in the way that it affects real estate investors. I have a link down below the video if you want to see more details. I did a video last month on this. The past few months, we've seen some important market changes that combined may be the triggering event for a change in the duplex market. Developing trends leave evidence. If you want to know what's likely to happen over the next month or two, watch to the end of the video. September 2024 was a neutral market for duplexes in the Sacramento Duplex market. We currently have a 3-month supply of duplexes. Over the last few months, we've seen a steadily growing inventory of duplexes hitting the market. With a 3-month supply, the market is entering into a more balanced phase where buyers have slightly more bargaining power than they have in the past, and a lot more inventory to pick from. Although there are always seasonal fluctuations in the listings for sale, there are 97.5% more listings for sale than last year at this same time. September sales were down 26% too, and down 23.5% from the previous months, and this represents a 25.7% decrease from last year at this time. When it comes to pending sales were up 23.1% from last month and 14% higher than last year at this time. This in large part is due to the significantly lower interest rates than last year at this time. Last October, interest rates peaked at around 8%. Right now, the interest rates are down to around 6.75%. Notice that the rates on the Freddie Mac rate chart that I've included on the screen are the base rates. So multifamily loan rates are always going to be about 0.5% higher than that Freddie Mac base rate. So with rates going down so much, why is inventory still going up? This can be answered by looking at the average list price and sale price over time. As rates started to come down earlier this year, you can see that the sellers responded by trying to raise the asking prices, despite the fact that most of these properties on the market were coming nowhere near breaking even at the prices they were at that time. The buyers started to rebel by not buying, which caused the inventory to start to build up over the last few months. Sellers responded by starting to lower their asking prices to try to get their property sale. But even with the lower prices, buyers will still on average negotiating a final sale price about 3% under the asking price. It's pretty important to understand that properly priced properties are not being purchased below asking prices. For the first time ever on this report, I analyzed the break even on an average list price duplex priced at $576,000 at an interest rate of 6 3/4. Now I put no maintenance or vacancy factors in there, so this type of calculation is good for a relative measurement of what GRM you would need to target just to break even in a perfect month. A more precise estimate with a full APR and more detailed calculations should be done once you target a specific property. Right now, based on those assumptions, the break even on a Sacramento duplex under ideal circumstances is about 11.93. This means on average that a property with a GRM above 11.93 will not provide a positive cash flow with 25% down. Over time, as interest rates go up or down, small adjustments can be made to figure out that break-even GRM. To better understand how this number will be changing, watch my upcoming video on how to analyze any investment property in 30 seconds. In this video, I go into this concept in a lot more detail. This is why I've been doing these GRM reports for years. Once you know how to use them properly, finding the properties that make sense becomes very easy. By looking at my weekly GRM reports, you can easily see which properties are priced right. And those that are not priced right are those that can be targeted for lower priced offers. This calculation also explains why the average list price and sale prices are going down for all of the duplexes in Sacramento, because there were only 5 duplexes that were below the target 11.93 GRM threshold this last week, and none of them were in Sacramento County. If you're enjoying this analysis and you're not already subscribed to this channel, please subscribe now so that I can keep you in the loop about all the important changes in the Sacramento investment market. So what does all this mean to you? I suspect that inventory of duplexes will continue to grow over the next month or two because most of the current inventory just doesn't pencil out. If the average list price continues to fall or interest rates continue to fall, this could mitigate this trend. The market may be at an important tipping point. While we're a long way from a buyer's market, there is a reasonable chance that the buyers will continue to gain more leverage in the coming months. Unless we see a significant decrease in interest rates or inventory, I believe prices will continue to trend down. For potential sellers, this past decade has been one of the longest periods of continued appreciation in prices that we've seen in several decades. But all market cycles end at some point. It's an inevitable part of the capitalistic system of supply and demand and the struggle. If you've been holding on and waiting for the peak of the market, it may have arrived. The lack of properties on the market that will break even, combined with a growing inventory and falling sales, has also been an important predictor in past market cycles of a need for a potential market correction. The downward trend in sales price and listing prices has been going on for several months now. In the next month or two, we will see if the lower interest rates help to eliminate this building inventory or not. Or if this trend continues, we may very well move towards a buyer's market for duplexes for the first time in many years. If you're thinking of selling and want to know the value of your property, look down below for a link so that I can get you an update on your property's value. For buyers, I'd be targeting the duplexes that are closer to that break-even GRM. And in the cases of those that have been on the market for more than 30 days, let's write some offers a little bit lower and see where we can go with those. Also, if I was a buyer, I wouldn't be buying my interest rate down right now, because I think rates are going to get better over the next 6 to 18 months. It might be a great time to get an interest-only loan and then look at a potential refi down the road. But the supply and demand will dictate how close we can get to our target numbers if we're writing lower offers. If you're not already on my MLS search and GRM report subscription, look for a link down below in the description to get started. Feel free to use the comments sections below to ask me any questions or to let me know about any videos you'd like me to make. Whether you're thinking of buying or selling in the next 7 days or 7 months, feel free to give me a call, text me, or send me an email so that I can answer your questions, and I will help you plan a smooth purchase or sale transaction.